Good morning, trading world. It is February 1st, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. Now that I have new projections for the month, I have this eerie feeling of a huge short squeeze coming. First, let's take a look at the Fed Watch tool for the FOMC meeting that's coming up later today. I don't really like this setup. It means everybody is set in leaning to one side of the boat heavily. We have a 98% probability of getting a 25 to 50 basis point rate hike. And around a 1% chance of getting anything else. A hike above 50 basis points. So let's put it on the chart like this. All right. If we get 0 to 25 basis points rate hike, we get a breakout above the range that we're currently in. We actually have a chance of getting into the next primary channel or next main channel, which the current channel we're in, the upper edge of it is 416, so we could have that chance to go above 416. 25 to 50 we pretty much stay in this range. $50 and above, we see a sharp decline down below this range. So that's pretty much how the probabilities stack up as far as where the rate hikes will take us. So again, 50 plus, we break sharply out of the current channel that we're in range, sharply below, and we go down below. We go down below this, let's see what channel. Down below that 398, 395 area. Now, the monthly outlook is bullish, closing above the 406.48 with a projected retrace of around 395 on the spot. We do have a dissonance between the technical side, which is bearish, and the quant side, which is bullish. The overbought zones are beginning to line up as I said it would in the beginning of the year. The overbought zone for the year was 393 all the way up to 414. The monthly has moved to 409 to 413, and the weekly is at 407 to 408. And the daily is at 406 to 408. For some reason, if we go down today, I don't see us staying down. With all the mega market cap earnings lined up after the FOMC, we could go down on the FOMC, then lift up on earnings the day after, or vice versa, up on the FOMC and then down on earnings. I am still a little frustrated because I had a target of 398 to roll a lot of the positions that I have on down and go long, and we went there after hours exactly to my target, but never got back close during cash hours. I had plans of getting long at that level as well. If we spike down during FOMC, which is very well possible, there is no way I can roll this many positions that fast, so it's going to be an interesting day for me trying to project and place roll orders ahead of time. Maybe I get some help from the trading gods and we, drift to that point lower before the FOMC where, it'll be a lot easier on me to do so. But who knows? Going back to the $1 million moments outlook. Remember, I said the majority of traders are right when it comes to direction, but wrong on timing and risk management. So if you're taking positions through this month, understand the amount you truly have available to risk, and then spend a third of that on positioning. Then give yourself the gift of time in those positions. We are stuck in a range. It may be a large range, but we are still stuck in the range nevertheless. The market is still irrational because of an order flow imbalance yesterday that has not been resolved. I imagine we may go lower before breaking out to the upside to kind of handle that order flow imbalance. With all that being said, let's get into the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have our Jack resistance 405 to 406 area, Queen resistance 407 to the 408 area, and then King resistance 409 to the 416 area. On the support side, we have our Jack support 404 to the 403 area, Queen support 402 to the 400 area, and then King support 399 all the way down to the 392 area. The main thesis for today is bullish, closing above the 406.48 with a projected target high of between 407 and 416. The alternate thesis is bearish, closing below the 406.48 with a projected target low of between 406 and 392. The main channel we are in is from 397 up to 416. The main channel below is 397 down to 379. I do expect to see a good bit of both the main and alternate thesis today. Probably the alternate thesis before the FOMC announcement, and then rising to the main thesis after the FOMC announcement. Yesterday, market strength and breadth opened gap up, and after a brief drop, we drifted up into the stratosphere the rest of the day. I somewhat expect strength and beta to drift lower the first part of the day with a spike lower at the announcement, then a reversal up. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. That brings us to our scenarios for the day. All right, our first scenario is going to be our expanded range day structure. We could have an initial push up to resistance before going back to revisit recent lows, then getting a wild swing at the beginning of the FOMC announcement, down, then up, leveling off, and then possibly continuing up. So that is our expanded range day structure, giving us maybe a close or two above the previous close early in the day and then late in the trading session. Let's bring up the next scenario. The next scenario could be our trend day down. We open, gap down, and start with a push back toward the previous close, represented by the blue line. And then we find resistance on or before that previous close. And then we reverse and begin the downtrend for the day. We usually find our midday chop around either the possible queen or king support area. This brings us about to the time of the actual FOMC announcement, which we'll probably get a head fake, a large spike down, followed by a large spike up, level off, and then possibly drift up the rest of the day. So that is our trend day down scenario. Our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance, and because of the FOMC meet, at the end of our midday chop coming out of lunch going into 2 p.m., we could see a wild spike up, followed by a wild spike down, come back, level off, and then drift lower the rest of the day. So that is the rounded reversal day type structure. Again, this FOMC meeting just feels out of the norm to me. I kind of feel like a lot of the action is going to be before and after the actual announcement. So either way, you have to be prepared. Again, like I said earlier, find out what you are truly able to risk and can afford to risk, and then use a third of that in positioning, and give yourself the gift of time. If you think you're going to be in a position a week, make it 2 weeks. If you think it's going to be 2 weeks, make it 4. That's pretty much it for today. Like I always like to end these off, it is with the utmost importance that I say this every day. Your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. I can't stress how important that is. Risk over direction. Because you have to have capital in order to play this game. And you can't allow one position or one day take you out from being able to play this game. So you allocate responsibly, never putting that much capital at risk in one position that it could sideline you for however long it takes for you to rebuild that capital up. So again, I can't stress how important it is to know and understand your risk. It's way more important than having the right direction. It is the most important thing that you will learn in trading. With that, I'm wishing you a positive trading day. Be safe. Let's go out and make it a great one.